Welcome back, guys, to another weekly outlook. It's Jademaster here. I hope you had the chance and opportunity to hop on a live session last week. Thank you for all who joined. Today we're going to take a look at the indices and what we can anticipate during the next week. Like and subscribe to support future videos, and I would say let's dive into the charts. You're currently looking at the monthly time frame of the S&P 500 E-mini futures, and as you can see, last week we had some significant changes on the monthly candle. It's now pretty bullish. It looks like it's pretty bullish, and we're still looking for a run above the buy side liquidity. I don't think I need to mention this again, but we're rallying from the bullish order block, which consists of these two down close candles coupled with a fair value gap. And you can see market respects it nicely with the candle bodies, and we're watching for a run above the buy side liquidity, but I think this is already clear. Now let's go into the weekly. Last week we anticipated a bullish week. Our bias was bullish, and that's what we got, a bullish up close candle. As you can see here, nice week, nice trading opportunities which were called on the live stream. Now we created the weekly order block, which is this down close candle. You can mark out the wick or the candle body. You can see we closed above the rejection block, and I think next week has the opportunity to run above the buy side liquidity. So expect some sort of retracement, maybe into the weekly order block, maybe not, but keep this area on your chart and view it as a level of support if price retraces into it, and then expect a run above the buy side liquidity. Quickly moving on onto the daily chart, let's take a look at what happened last week. You can see Monday's candle, nice bullish close. We found a very clean setup with a nice run in price. Price took out the buy side liquidity, our first target for the week, straight away on Monday, and that's why we anticipated a retracement for the middle of the week. We outlined this fair value gap coupled with the balanced price reach, but price decided to retrace deeper into this fair value gap. Then market still strongly reversed at the end of the AM session on Wednesday, going into the PM session, and closed with this huge wick. And then on Friday and Thursday and Friday, we expected a bullish up close candles on both days, and that's what we got, as you can see here. Beautiful delivery on Thursday, and then Friday slightly failed to trade into the 50% of the daily wick. But it doesn't matter that it didn't trade into the 50% of the week. We created a new fair value gap. We have also a new daily bullish order block. You can outline the wick or the candle body right here. Expect a retracement maybe on Monday or Wednesday into the daily fair value gap, and then a run into the 50% of the wick of the daily candle. Now let's take a look at the 30-minute chart of the S&P 500 so we can figure out how deep the retracement will be. You can see in the last trading hours of the week, market dropped with a big down close candle into the 30-minute fair value gap, and on Monday we could see a rally straight away, taking out the buy side liquidity and maybe trading to the 50% of the daily wick. Or price could of course trade lower and take out the sell side liquidity, which resides on the S&P 500 and on the Nasdaq. US 30 traded below the low, formed the divergence. So we could anticipate a run below sell side liquidity, trading into the daily fair value gap, which is this gray box right here, which you can see. Also we have the weekly order block, and somewhere here should be also the daily order block if you outline it on your charts. So keep this in mind that price could retrace a little bit deeper, taking out sell side liquidity or running away on Monday straight away. On Friday, we took already a look at the economic calendar, and we saw that we have a crazy week ahead of us. It's the first trading week of the new month, so we have NFP coming out on Friday. On Monday, we have no news drivers coming out, so we usually expect a consolidation day, but of course price could rally if it wants to, like it did this Monday. But you need to consider the fact where the market is trading at and if it wants to run or not. On Tuesday, which looks like the best day to me, we have a medium impact driver and a high impact news driver coming out at 10 a.m. I would wait for a setup after 10 a.m. Just keep an eye on the S&P 500 after 10 a.m. and see if it offers you a setup on this day. On Wednesday in the afternoon, we have the FOMC statement coming out. I would completely avoid this trading day because the AM session could just stay inside a range and build up liquidity above and below the marketplace without trading in any clear direction, which involves a lot of manipulation and run on buy and sell stops. On Thursday, market could go quiet after we had the FOMC statement in the afternoon on Wednesday, which will probably be a large range day. So Thursday could also stay inside a small range and rally nowhere. And on Friday, we could see the final continuation with the NFP news release, trading above the equal highs if it didn't do it in the beginning of the week. That's where I would anticipate the equal highs on the weekly chart being taken out. Also after that at 10 a.m. we have some ISM service PMI numbers coming out on Friday. So if you want to trade on Friday, then I would wait for a setup after 10 a.m. and see if you can get a small run before the week closes out. Considering the fact that we have a lot of news coming out this week, I would prefer 1 or 2 setups for the week and then just close your charts and stay away for the rest of the week. If you get a setup on Monday or Tuesday, don't push it too hard and just stay out for the rest of the week and secure your profits. The market will trade next week, so don't be in any rush in taking a setup during this week. I'm not really sure which weekly profile this week will unfold. Last week in the weekly outlook, we anticipated the Tuesday low of the day, but then we quickly adapted after Monday and Tuesday and switched to the Wednesday reversal profile, which then played out perfectly. This week I'm not sure, but we could see a seek and destroy bullish Friday weekly range profile. As you can see, the profile is neutral to low probability. We have a lot of runs and stops. Market consolidates Monday through Thursday, running shallow stops under and above intra-week highs, then runs the intra-week high and expands higher into Friday. That's what I want to see. Friday should expand higher into the equal highs. And how to anticipate this profile when the market is awaiting interest rate announcements or non-farm payroll can create this profile in the summer month of July and August. Better to avoid these trading conditions. And that's just what I said. Better to avoid these trading conditions. Take one good setup. If you find one, then take it and stay away for the rest of the week. We are currently not in the summer month, but this profile still can form. So our buys for the week is bullish. Outline the levels which I mentioned on the daily and weekly chart. These are the most important ones. If you want to stay up to date on a regular basis, join my Telegram channel, which is linked in the description below. If you liked the video, then hit the like button and subscribe to support new videos. I hope you could find a valuable piece of information in this weekly outlook, and I would say we will see us in the next one. Trade safe, stay safe, bye.